Hi, this is Mark. This is the 15th of September. We've just had the market open an hour ago and we've had some very big gaps. There was news out of the US that President Obama's selection to replace Bernanke has withdrawn, and this has spooked the market, probably an overreaction, and we've had big gaps. So here, for example, the British pound closed at the weekend at 58.72 and it's open tonight 57 pips away. Equally, the Swissy has fallen and opened down here. Friday's close to tonight 60 odd pips. The Aussie dollar has done the same. US dollar yen has done the same, and GBP I've just shown you as well. So what do you do? Well, it's a bit like waiting for a bus. They all come at once. I've shown you how I do this before. I go down to a 1 hour chart and then I wait for the candle to close, and I then place my stop just above that candle's close. So here, for example, were I to take the pound, and the reason the pound stopped here, I believe, is because it's that weekly 200 EMA. So you could place your stop on the pound here, 16 pips away, and you're looking at a potential gain of 50 odd down here. So that was a good opportunity. Now the only thing is the pound has been fairly bullish in the last few weeks, and we've had better news out of the UK than the Eurozone. So I have taken the short on the Euro USD. Euro USD came up, here you can see on the daily, it stopped to the pip at the 78.6 recent move, and therefore I have waited, and on the 4 hour you can see we're way outside the Bollinger Band, and I've now waited for price to close below that 78.6. Good thing again, a very small stop, 16 odd pips, and we're looking for a potential gain down here of 16. So I just need to put my stop in place on this one. Now the dollar yen, and again I've explained this in the past here, I was looking on the dollar yen for potential bounce back up from 98.66 area here as per Sunday's analysis. And I have explained this before, and see the videos and section on my gap trading method, is if price drops down to one of these areas, these major lines in the sand like this one, which is 50% fib, EMAs and previous support and resistance, then I take the trade straight away. So I've actually been in this trade now for nearly an hour, and at the moment we've gone absolutely nowhere. I placed my stop initially down below this candle here. I'm just going to leave it a little bit longer until the gap hopefully closes some more. But that is the way I trade gaps. Sometimes I'm more aggressive, but these were very big moves on lots of pairs, and last week some of the gaps didn't even close. So I was a little bit more cautious this week, but that is the way I am playing it. And now we are simply working on the strategy of hope. You hope that you made a decent decision. You can't do any more, but the thing is that gaps usually fill. And Murphy's Law, the pound at the moment appears to be the best one, and I took the euro. But anyway, let's see what happens. Just to explain why I've taken the ones I have as well. This is the Aussie dollar. Now the Aussie dollar had a nasty spike, and the spike was 50 pips. So the problem there was that after the 1 hour candle closed, let's go down to the 1 hour on the Aussie dollar, you're going to need a stop up here, some 50 odd pips away. It's just not worth the risk, because there's a chance it's going to come back up here before then hopefully falling down and closing the gap. Equally the Swissy. I've used the Swissy for correlation with the euro, because if the Swissy is going in one direction, the euro usually goes in the other, and therefore this was a tradable gap. But the thing about the Swissy is I didn't have any other reasons really to take this trade. I suppose if I fibbed this recent move, I may well find that we have a fib in the way. Not particularly, but you could have gone below the 78.6 fib, but again it's 40 pips away. So I have chosen the pairs that I have shown you. Other than that, what's happened at the open is the Euro Yen dropped down below the 13200 line. So that was not interesting, and it wasn't big enough gap either. And equally the Aussie dollar yen, I'm looking for a pullback, and we've not got that as yet. Very small gap on there. And equally we have a gap on the CAD. Now if as a result of this gap it spikes down, remember I said that I'm going to place an order here. I'm just going to sit and babysit this trades for the next hour or so, but I will be placing an order now, forward order here on the CAD for a potential bounce trade back up. Okay, if you want to know more about gap trading, have a look at the video, the link that I shall put in the post for you. Hi, this is Mark. I've recorded this segment Tuesday morning after the gaps that we had at the market open that I showed you on Sunday. What happened? Well, the Euro came back and took me out by a handful of pips and then promptly fell almost to 85% of the gap, which once you get to 85% of the gap, I'm out of these trades. I also shown you how I took the dollar yen and I explained why. That the dollar yen, this is a 4-hour chart, had fallen down to the area that I wanted anyway, and therefore that was the logical place for me to take the trade. So we had this first hour candle close, and then I showed you how I'd set the stop below the low of that one, and it took forever. I mean, yesterday was a bank holiday in Japan, and therefore it was to be expected that not a great deal was going on. I normally scale out 25 pips after 25, but I just left this to run in the end. And then last night before I went to bed, I placed the stop here initially, and then I'd moved up a little bit further. I can't remember where I was. Anyway, thankfully it's just now closed the trade from it. 99.30 was my target, and the reason I'd set 99.30 as the target, crack it, only just hit it as well, was because we had 61.8 fib in the area plus the confluence of these EMAs. And therefore that was the logical area for me for a target. So, job well done. The other one I explained on Sunday that I didn't see potential on my main pairs, and therefore I was moving to my backup pairs for potential trades. And here was the CAD, the dear old loony. And I explained why for multiple reasons I was looking in this area. And it said 1.027, I believe, so you add 10. Now it didn't quite get there. It came down within a pip or so of my entry. But because I was watching this on a 4-hour chart, I was able to manually, thankfully, catch this. So my order had been set at 102.80. And as I say, I think this came down to 102.81. There we go. But I saw this candle close and then took the trade here. The Bollinger Bands were closing at that time as well. And again, I scaled some out of the trade, leaving the balance to run. And in terms of a target, where we're looking, well, go back to the weekly. I was explaining before, this was my entry for multiple reasons. I think we're about 40, 50 pips up now, 50 odd pips in profit from Sunday's analysis. And the logical area now for me on my main account, my live account, will be here, this monthly 55, at which point I will take some off, and then I will leave the balance to run because we may get a home run on this one. So that was a decent trade, again pre-planned from Sunday. Other things that happened, we had that Aussie dollar. I showed you why I didn't short the Aussie dollar during the gaps as I went through the process of which, because of this huge spike, and it meant that I needed a stop of about 60 odd pips, and as it turned out it did need that stop because of that's where it went next, and it has then come down and closed. We also looked at the possible pound, and I explained with the pound that I just didn't fancy the pound. And here we go, here we were on a 1 hour, but what did he do? That meandered along around all day yesterday, came back, would have taken me out because higher than the 1 hour candle, has now come down and almost closed the gap. So for me this gap has closed as well. Swissy, I showed you why I wasn't going to take that one because of the fact that there wasn't really any other major support around there, but I used it for correlation with the euro to confirm that that was a trade to take. Euro yen, well, it's come back up above the 132 line this morning, but it closed below it last night, which is a little significant. Bollinger Band, nasty Bollinger Band now on this 4 hour, but if you were going to take the trade this morning, I suppose you could be confident with a stop 20 odd pips below, and you could be on for a 130 pip move up there. So if we get a pullback on that, I will take that today. Aussie dollar yen, I was hoping for a pullback down here. It hasn't happened. It just pulled back to the 200 EMA. And again, hopefully you can see why I place so much importance on these EMAs. And that's it. So the aim for the week, as I explained Sunday, lazy trader, want to be out here as soon as is possible. And I think by now I must have hit my target for the week. So anything else that I do is a bonus. Don't trade today, it's FOMC, or certainly don't trade this evening, i.e. Wednesday, because it's FOMC and it's likely to go haywire. Have a great day.